Understanding tax-free bonds. What's the big deal with tax-free bonds? With 1-year fixed deposit interest rates fetching close to 8.5 to 9% per annum, investors with a view on long-term debt investments can look at the upcoming tax-free bonds issues. Therefore, it becomes important that investors should know all about the tax-free bonds so that they can make the right investment decisions. Okay, so exactly what are tax-free bonds? Tax-free bonds are issued by select central government public sector units, and as the name suggests, they are tax-free instruments. Interest from these bonds does not form a part of the total taxable income, and hence these bonds become lucrative investment options. These tax-free bonds become best suited options for investors who fall in the highest tax bracket. As far as their other specifications are concerned, the yields which these bonds offer are linked to the average yield of government securities having similar maturity which have been issued in the previous 15 days. Also, the tenure for these bonds could range from 10, 15 to 20 years. Why should I invest in tax-free bonds? The biggest reason you should invest in a tax-free bond is tax-free interest. Whilst in an FD, tax on the interest that you earn gets deducted at the source itself, the interest that you earn on tax-free bonds is completely free of tax. But remember, the amount you invest in these bonds will not get any deduction under any section of the IT Act. Beyond the savings on your taxes, these bonds also give you great safety. Since they are issued by state-run companies, they are quasi-government bonds and therefore are extremely safe to invest. Further, most of them are rated AAA by leading rating agencies, and AAA is the highest level of safety. Plus, they have a good possibility of lucrative returns with a very high rate of interest. Tax-free bonds also give you great flexibility with very high liquidity. Since these bonds are listed on the stock exchanges, you can buy and sell these bonds anytime before the maturity period. So how can I go about investing in tax-free bonds? If you are from one of the 4 categories of investors, which is qualified institutional buyers, corporates, high net worth individuals, or retail individual investors, then you can invest in tax-free bonds by simply submitting a physical form furnishing the details which are requested. Alternatively, you can also apply for tax-free bonds in the primary market by simply logging on to www.edelweiss.in. Since tax-free bonds are also listed on the Bombay Stock Exchange, you can buy them in the secondary market as well. So what are you waiting for? Invest with a long-term horizon and get stable returns with tax-free bonds.